Alright, welcome to another video. Today I'll be talking about breakouts. What is the best way to trade breakouts? Based on my experience, I can tell you right away, I used to prefer reversions, reversal trades. However, with time, I learned to trade breakouts and breakdowns as well. Initially, my issue was I could draw a level. So here on ETHUSD on the hourly, we can clearly see that this is some kind of a resistance. Right from here, more or less, right? Could be this, could be that. I'd probably draw it somewhere here around the candle closes. So what happens is that once you're here, you're thinking, all right, we got a first touch, trade that probably down. Then it keeps coming back and you're starting to think, what if it's a breakout, big breakout coming up, targeting probably this level or maybe higher or even higher than that. So you're thinking, I need to get in on this breakout. And maybe you start doing the following, entering every time price comes to the resistance, thinking that this is the one. This is the time when the price is going to break out and just go to either this level and then this level, and you're going to miss out on a trade taking profit here or here. So what happens is you probably enter here, you get stopped out, enter here or here, also get stopped out, and then you enter here and you also get stopped out. So by the time you got all of these cuts, the case could be that you were tired. Maybe you were on a tilt, you were emotionally affected. Maybe you got angry, maybe you got annoyed, maybe you got irritated. Maybe you don't want to trade this setup anymore and you just leave it and you say, you know what, probably not going to break out today or tomorrow. I'll just come back to it. Let me just trade something else. And then it breaks out. And maybe, just maybe, you manage to get in there one last time. Finally, you get your breakout. More likely than not, what has been the case with me when I was just starting to trade breakouts, I would get discouraged after second or third try and I would just give up on the idea and I would just tell myself, all right, that's not the setup, I'll just try something else. And then I would see the breakout and I would get angry because I knew that the breakout is inevitable. I knew that the level is getting weaker. I knew that the price is crawling closer and closer and that we're eventually going to flip this resistance into support and travel to here and maybe here. So what I'm saying is that instead of lots of little cuts right here and trying to get that breakout this way, there is an easier way, in my opinion, a better way, a more relaxed way. Instead of trying to get in on the first breakout, you can always get in on the pullback right here. And more often than not, pullbacks tend to also lead to major moves as well, as you can see right here. So instead of getting somewhere here, you still get in on this trade on a very similar level, right? Pretty much the same level right here. Actually, if I zoom in and if you target these candle closes, if you shift the resistance a little bit lower due to the recent bias in price action, right? This is the resistance that's from levels from Monday and this is the Friday resistance. So you try to get in on the more recent price action and you get in on these levels right here. See, once the price breaks out and then it comes back, now this is a support. This whole level, this whole area right here that used to be your resistance, that trapped so many traders, that stopped out so many traders that were trying to get the breakout, now it's a support. And once the price does come back, you get a better move actually than what you could have gotten in the first place. And what's more important, you save a lot of emotional capital by not engaging in this chop, right? By not getting your account chopped to pieces just like here. And you actually do get in and then you get a nice breakout. Obviously no shame in taking profit right here. You don't have to catch the entire move and go the entire way. But this from 2068 to 2164, depending on the leverage, still would have made a very nice trade on the hourly. And this, in my opinion, and based on my experience, is just a simpler way, a better way, a more reliable way to trade breakouts. It's a way that lets you save your emotional capital, make sure you're calm, make sure you're focused, make sure you're not irritated, and that you still catch the move that you were hoping to catch in the first place. And then coming back to Ethereum again on the hourly time frame, let's say you were trading this support right here. Eventually you thought that given the amount of touches right here and that the price is not able to break out, let's say you're thinking that sooner or later it's going to break down. And eventually you would have been right. As you can see right here, we did break down and we traveled much lower. But just like with the previous example of the breakout to the upside, with this example of a breakdown to the downside, your account would still have gotten chopped. You would have had your emotional capital affected. You would be irritated irritated, you would be annoyed, trying to maybe short here, then once again here, then once again here, then maybe here or here, and then maybe even here, and you would always get stopped out, and you could have gotten as many as, let's say, 3 stops, as many as 5 stops, maybe just 1 stop, maybe just 2 stops, but it would be annoying for you. So if your thesis is that sooner or later this support is going to give out and we're going to travel lower, instead of trying to get in right at the level, it is much easier to wait for the price to eventually break down, and then once it comes back to the level, then to get a short from here. And I understand that even though the resistance was much higher, even though it was right here, and you wouldn't get the exact touch, it is wise to adapt and to think that if we're getting this many weeks in a row, maybe it's telling us the actual level is a little bit lower than the hourly candle closes, and you would adapt and you would enter right here. So let's move the level a little bit lower to the wicks, and we see that once the price eventually breaks down below this area right here, it does give you a test right here and an opportunity to actually trade this breakdown. And maybe you would have caught it right here once it was actually breaking down. More often than not, in my experience, I found myself when I'm trying to catch the breakdown or breakout in the last minute, I would eventually enter somewhere here or maybe even lower, trying to get in on the action as I see the breakdown that I was waiting from all the way here already happening. Or maybe I would have even entered here. But regardless of what this hypothetical trade would have been, in my previous experience, I would try to always enter at the level, and more often than not, given the amount of touches right here, I would get stopped out multiple times. So this is a much simpler way to just wait for the breakdown to happen and then get in on the test, and there is your move. Another option for this scenario is that if you don't want to wait for a pullback to the level, because obviously you don't always get pullbacks, they're just safer and easier to trade, and they're emotionally easier to handle than a lot of chopping right here at the level. You could also wait once you see that the price is chopping at the level, indicating that it might break down soon. You might just enter on a pullback from here to any meaningful resistance from above, and you enter and you try to catch the breakdown entering right here. That way, the benefit is that you don't have to endure all the way to this level to understand that we are not breaking down, we're actually breaking out, and we're going the opposite way. So you don't have to tolerate all of this. You can just get into the trade on the pullback from this level, looking to take it down and lower to your target. So instead of enduring this price moving between the level you're hoping is breaking down and this local resistance, you could have just entered here, taking it to the level that you were hoping is breaking down, and instead of tolerating all of this, you would set a decent stop loss somewhere around here, maybe saying that if we do take out this level right here, we close above, then more likely than not we're just going to break out to the opposite side, and you don't want to be in this trade anyway, and you would only be risking this amount right here instead of this from the breakdown level. And then this pullback, as you can see, would have proven to be an excellent entry for a short. Could have taken your profit here lower, could have taken it even here if you would have tolerated this pullback right here. It's entirely up to you, but in my opinion, I think this is a much better entry when trying to catch it right at the level. You obviously can catch it right at the level, as we can see right here. If you would have entered here, you would have gotten the same move, right? But I'm just saying, if you're the type of person that easily gets discouraged, or if you get easily irritated, or if you get just tired and you just give up on the idea, on the setup, you just walk away and you trade something else, or maybe you don't trade for the day or for some period of time. Instead of doing that and missing out on a trade, you could have just waited for a pullback and gotten a trade right from there.
And if you want to learn how to identify real support and resistance levels, watch this video on my channel, how I draw real support and resistance levels, or you can just use volume profile to identify support and resistance instead of mapping it out based on candles.
Another example is gold right here. As you can see, there's a certain level from here, and let's say you're trying to trade this breakout, right, which inevitably happens and goes to this level right here. So if you're back here, back in February 2026, you see this first touch to this level that we lost right here, and it gives a reaction. You think, oh, well, we already tested it once on the way down here. This is a second test. Let me try to get a breakout on the third test. And you go, you enter here on the third touch right here, probably get stopped out. And if not, and if you held through all of these, probably get stopped out here, or get stopped out here, right? Any of these points. Or maybe if you got stopped out here the first time, you then enter here, or maybe then here again, and you keep getting stopped stopped out all the way here, right? And then maybe you even enter here thinking that, all right, this was all a trap. Now here we're gonna break out, and it still brings you back down. In order to avoid this, just like with the previous examples, it is much easier to get in on a pullback right here, and then you get your trade. So obviously the pullback, just like in the other example, it doesn't exactly touch the level, which is why if you watch my how to draw levels video, I will explain why I like boxes, why I like zones instead of just straight line levels, because you get these kinds of situations where you have a wick and it barely touched, but this is the zone that I was trying to test from above before going and giving you a real breakout to this level right here. Actually, just to illustrate my point, I went ahead and decided to draw an actual level box right here for you to see that boxes, sort of zones, in my opinion, are a little bit more versatile to straight lines. As you can see, instead of entering here, here, or maybe even here, you would have waited for a confirmation that we are actually going to close firmly above this resistance, and we are going to come back to it and see if we can hold it as a support. And you get here at this support that used to be a resistance from here, and then you have your long trade from this point. And listen, obviously, depending on your risk reward ratio preferences, depending on your risk tolerance, depending on your mental capacity, it's possible that maybe you would have gotten long here or here, and you would have just held all the way through this roller coaster, and then finally get your breakout right here and take your profit, whether it was here or here. Again, depending on your risk reward ratio. I just think that getting in on the pullback is safer, easier, simpler, just saves you time, saves you from this emotional roller coaster right here, and just in my opinion is a cleaner setup, an easier trade. And just to provide you with an example of a recent trade I made on ES on the hourly, unfortunately I forgot to press the record button as I was in the zone. This was the opening, so early morning for me, so I completely forgot to press the record button, but nonetheless, just to share with you guys, I was watching for this area to give out sooner or later from Tuesday, but instead of getting on it at the moment of the breakout, what I did is on Wednesday I saw that we're coming back down to this level right here, and I got in on the pullback and took the long trade from there. I avoided this and I just got an easier entry from here and just take it long. And this is regular trading hours. I know I said I mainly use the extended trading hours, but I still do look at RTH from time to time, and this was a very nice setup. Just wait for a pullback to the level and go with the trend. If we go to ETH on a 15-minute time frame for the same trade right here, this was the opportunity. Once it came back to this level, which used to be resistance before, just wait for this, right? Firmly above, pulling back to it, take long from there. Actually, even here, let's say you were trying to get in on this breakout, maybe you would have stopped out, your account would have gotten chopped, you would have gotten many stop losses, you would have gotten discouraged. You could have just waited for the price to go firmly above, come back for the pullback. Now we're using this resistance as a support and take it long from there. Same logic, same idea. So this is how I trade breakouts. I just wait for a pullback. Same with the breakdowns. I wait for a pullback from below to the level and just go there with the trend. It's much easier, much simpler, much cleaner, and easier on you mentally as well. So if you do find yourself struggling with breakouts, just maybe wait for the pullback instead. And also take into account that you might not always get pullback, and that's just part of the game. So you have to take that into account. You have to be aware of that. If you're going to trade this way, if you're going to wait for the breakout to actually happen to then join the move, then you're just going to accept the fact that maybe sometimes you'll miss a trade, and that's okay. I understand that this is not really a breakout strategy, but more of a reversal trade turning into the trend continuation, trend following strategy, but I just think it's a much easier strategy for a lot of people out there. And then coming back to this scenario, obviously, apart from getting long on this pullback right here, maybe the good move would be to wait for the price to go back to where the move originated from, and then you can go long from there, and then it's much easier to hold through this. So I guess my thesis is that I rarely, almost never, enter the breakout, the breakdown at the level that I'm thinking is gonna break. I prefer to wait for it to come back and I enter here from where the move originated, from the closest support or resistance, and then take it to the upside. Or once the level is broken, I just wait for the pullback and then I enter right there. Alright, thank you very much for watching this video. I'll be uploading more videos on different strategies, trade breakdowns in the future. If you like this video, please subscribe. Thank you.